Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, Dave Bartosiak here, and I've got a top stock pick of the week for you. I'm talking about General Motors, ticker GM. So first and foremost, right now it is a Zacks rank number one strong buy. If you take a look at these style scores, we have a value style score of A, growth of C, and momentum of A to help it round out with a VGM composite score of A. So Zacks rank number one strong buy with an A for the VGM composite score. You're rocking and rolling. The automotive domestic industry is in the top 24% of our Zacks industry rank. Now, what I want to do here is I'm going to skip over the top part of this page, and I'm going to work from the bottom up. The big surprise last quarter, which just passed, I think it was just a few days ago, or last week rather. You had a 52-cent surprise to the upside. Analysts were looking for 228, and they delivered with a 280. So that's a big jump there. Quarter before that, you had another surprise, about 14 cents, which is great, close to 6%. Quarter before that, you had a 9-cent beat. Quarter before that, you had a 7-cent beat. So look at how these beats are increasing in magnitude here. That's a good thing. So things are accelerating there at GM. Now, flip that over to our Zacks consensus estimate, and you see that they've upped the ante here considerably on the current quarter, next quarter, current year, and next year. Look at how the current year has gone from 936 all the way up to 1006. Next year from 952 up to 1080. So everything is starting to move in the right direction. Now, still, current year, Zacks consensus estimate, that's still a small contraction of about 5%. Next year, 7% growth. So that's a good thing moving forward for GM. So you have these growth numbers, so that PE should tick up a little bit, right? We're talking less than 7, okay? Less than 7 on the PE. Industry average is 98. Why? Well, probably a little company called Tesla that you might have heard of. It's definitely pushing up that industry average. But the S&P 500 is trading at 25 times. Now, granted, your domestic auto manufacturers always kind of trade at lower PEs, but under 7, that's pretty good and pretty cheap, I think, for GM. And then the next thing I want to touch on with you guys is the chart, right? Let's just look at a couple of these. So first, I love the price consensus and EPS surprise chart that we have on Zacks.com because it shows us the trend in earnings and what the stock has done as a result. So you can see how earnings kind of bottomed out in 22 and 2023. Things started to get a lot better. So those earnings moved in one direction, which was to the upside, and it should come as no surprise that the stock followed along. Now, you do get a ton of pullbacks here. You do get pullbacks, and I do understand that. And those pullbacks are usually tracking along with earnings rolling over a little bit, right? So when you have these little earnings rollovers, the stock does give some back. But now we've got this huge jump as these earnings are going parabolic and ticking back up. So this is a good thing, and it's the reason why GM is rocking and rolling is because they've had a ton of reports where they're coming out and exceeding expectations. Earning estimates are all going in the right direction, and the stock is finally tracking along with it. So if you want to pay 7 times earnings for a stock that's rocking and rolling, you can do a lot worse than picking up some of this GM. All right, folks, that's my top stop pick of the week. Who's next? What do you have for us, my friend?
Thanks, Dave. Ben Rains here for my top stock pick of the week at Zacks. Today I'm looking at Amazon. Amazon is a Zacks rank number 2 buy heading into its Q3 earnings release on October 30th, so it's the end of this week. The AI Hyperscaler is trading 20% below its average Zacks price target, and its growth outlook is really strong. Amazon also appears poised for a potential breakout given its stellar valuations and AI initiatives. So before we dive into some more of the estimates and some of its charts, I want to just quickly go over where Amazon is at the moment, kind of the broad base case for Amazon. So it operates one of the world's largest cloud computing business, actually the world's largest cloud computing business. AWS holds roughly 30% of the global cloud infrastructure market, surpassing Microsoft's 20% and Alphabet's 12%. AWS helped transform Amazon into an economic and technology giant. It also provides a strong foundation for rapid AI growth. Amazon is among a few AI hyperscalers racing to shape the future of AI by building data centers everywhere they can to support the growth of large language models like ChatGPT and beyond. AI applications are, of course, still developing, and many see a future where AI becomes far more advanced and integrated, transforming nearly every part of the economy. Amazon is betting heavily on playing a major role in the future of AI developments, regardless of how applications evolve. The e-commerce leader, which controls over 40% of the US market, is integrating AI and robotics into various areas of its business, trying to cut costs as well and improve the broader customer experience. Additionally, Amazon Prime's expanding its streaming offerings to better compete against Netflix, and its digital ad segments growing as well. The strength of those higher margin AWS and ad segments are helping it improve its earnings along with it significantly boosting its efficiency. So let's head over to ZRS System and Zacks.com to dive into a bit more about Amazon. Okay, so let's start with some earnings growth recently from Amazon. We're here in our ZRS system. So this is their GAAP earnings. We can see that it was on a steady trend upward until kind of the post-COVID period, and now they're on a big trajectory heading straight up, which is a really positive sign as they focus on the bottom line along with AI growth and other key businesses. But they're not trying to grow kind of at all costs, not worrying about the bottom line anymore. So we can see that the company did, let's see the exact percentage, in 2024, it did about 95% net income growth and then 91% earnings per share growth, which is really positive. And then we can see that it's steadily growing its revenue at a really impressive clip. It's not going to grow anymore at those 20 plus percentage, just as the numbers get so big, it becomes nearly impossible, but it's growing. It grew 11% last year and 12% the year before that and 10% back in 2022. So let's go ahead and now take a look at our estimates going forward. So, it's now Zacks ranked number 2 when I looked at it on Friday. So just for anybody noticing, it's now Zacks ranked number 2 buy. I mentioned it on at the top of the show that it was a Zacks ranked number 1 strong buy, but it changed from when I looked at all this on Friday afternoon. So still though, this kind of same positivity of why is a Zacks ranked number 2 buy heading into its earnings results later this week. We're calling for another 11% revenue growth in 2025, and then about 10.5, nearly 11% growth in 2026 to go from about 638 billion in 2024 all the way up to 783 billion next year. So just staggering growth. And on the bottom line, we're calling for another 23% growth this year and then another 12% growth next year on top of what was 90% growth last year. So trending heavily in the right direction. And we can see that its earnings estimates from before its Q2 report were at $6.38 all the way up to $6.82, and then $7.67 versus $7.33. And we can see that its most accurate estimates are trending well above consensus. So for Q3, their soon to be reported quarter, up 12 or 13% above consensus, and then trending higher as well for 2025 and 2026. And we can see that it's beat by an average of 23% over the trailing 4 quarters. So that's a really positive sign. And then we'll go ahead and take a look at some more kind of just historic growth for the company and why it could possibly be headed for a breakout. So as we have this chart loaded a little bit, we're going to go see what Amazon's performance has been. Okay, so now that we're over on our performance chart for Amazon, we can see that this is over the last 15 years. Amazon's up about 2,600%, blowing away the broader tech sector, which is up about 720%. And its outperformance continued over the last decade as well, but that outperformance kind of shrunk. And then if we see actually over the last 5 years, the stock has trended well below tech, which I actually think is a positive sign if you're not in Amazon already and why it could potentially be ready for a breakout. So it's up only 43% over the last 5 years, while tech's up about 140%. And then if we look over the last, or we could just look at 2025, it's up just about 3.5%, while tech's up about 26%. So if we look then at some technical levels, we can see how it might be ready for a possible breakout. So we'll go here over the last 10 years. We can see that we're now kind of in this little channel right here. It's trending. It just jumped above that 50-day moving average, which we can see right here after finding support at that 200-day. And it could possibly be ready to break out above the top end of its kind of all-time range here. And as I said, it's trading 20% below its average Zacks price target. So we could see if it has a strong report later this week, easily break out and start climbing. And then its valuation levels kind of give you even more optimism for the stock. So we can go over the last 5 years. And so this chart might look a little strange. I'm going to put it against the tech sector because that's a little bit more of where Amazon is at this point compared to that retail sector. But we can see that it's trading at around 29.8 times forward 12-month earnings, which is nearly in line with tech, even though Amazon has outperformed that sector over the last 15 years. It was trading as high as 123 times. So I think over the last 10 years, it's trading at like a 95% discount to its all-time highs. It's trading well below its median over the last 5 years. Its median was 52. So its valuation levels are trending heavily in the right direction. So as long as it can prove that it's ready to continue to grow on the bottom line, and its earnings growth is seemingly really impressive going forward, Amazon looks like it'd be a long-term buy, especially at these valuation levels. All in, investors might want to consider buying Amazon for a potential post-earnings surge and as a longer-term buy and hold for AI growth. Wall Street also largely agrees with 52 of the 58 brokerage recommendations that Zacks has for Amazon coming in at strong buys. So that does it for me in this episode of Top Stock Picks at Zacks. Make sure to check out our Zacks.com/promo page for a look into some of our services, portfolios, and more.